Crude oil futures closed 1% higher last week, primarily driven by escalating tensions between Israel and Hezbollah. The market has largely disregarded soft U.S. gasoline demand, focusing instead on potential supply disruptions in the Middle East. Israel has deployed troops to its northern border as attacks from Lebanon have increased. Most of the market analysts suggest a direct military confrontation between Hezbollah and Israel is becoming more likely. The potential for Iranian involvement or Israeli strikes on Iranian energy facilities poses a substantial threat to regional energy supplies. Israel's offshore gas operations are particularly vulnerable to potential Hezbollah attacks. More importantly, if Iran becomes directly involved, it could lead to a broader regional conflict, potentially affecting major oil shipping routes like the Strait of Hormuz. The U.S. Energy Information Administration reported unexpected builds in crude oil and gasoline inventories for the week ending June 21. Crude inventories rose by 3.6 million barrels, contrary to analysts' expectations of a 2.9 million barrel drawdown. Gasoline stocks also increased by 2.7 million barrels, defying projections of a 1 million barrel decrease. Gasoline consumption fell below 9 million barrels per day, partly due to the impact of Tropical Storm Alberto on coastal areas. The 4-week average for demand is about 2% below last year's levels. This data has raised concerns about weakening demand in the world's largest oil consumer, especially during the peak U.S. summer driving season. Despite these concerns, the market remains more focused on the potential supply disruptions arising from geopolitical tensions. The oil market outlook is bullish in the short term. The WTI futures chart displays a consolidation pattern between $77 and $85. Recently, the market has broken above the $80 resistance level, signaling potential bullish momentum. With the current price at $81.50, an upward trend continuation seems likely. Technically, the short-term trend is up, and traders are still in buy-the-dip mode unless traders completely eliminate the geopolitical narrative, in other words, if peace breaks out in the Middle East. Otherwise, it is a clear path to at least $85 if the news is bullish. Please like and comment to support the channel. See you in the next one.